to understand the global market cues today, we are joined by Geoff Dennis, who's an independent emerging markets commentator. A very warm welcome, Mr. Dennis. Before getting to specific markets, let's talk about Trump's big, beautiful tax bill that is going to be up for debate later in the day today. So I just want to get your first thoughts about the bill and how do you think that's going to impact the markets, global markets in the month of July, given the kind of record highs that we have seen US indices touch towards the end of June?
I think this BBB, as it's called, the big beautiful bill, is a clear risk to markets going forward because on most sensible, I think, assumptions, it's going to lead to a very large increase in the US debt level to GDP and sustained level of high budget deficits because of the extension of the 2017 tax cuts, and also because you don't really have enough in the way of controls on spending. And so I think we're going to end up with higher deficits. And I think this BBB, so to speak, although clearly some sort of package is fully priced into the market now, there is going to be a danger as we go forward if these deficits eventually start to pick up, that at some point the bond market will react negatively. So I don't think it's a particular threat to the equity markets right now, but we have to keep our eye on long-term interest rates because, frankly, I don't agree with much that Elon Musk says, but I agree with him when he says this is a really terrible bill and it is going to cause a problem for the bond market eventually down the road.
So that's as far as the big beautiful tax cut bill is concerned. But Mr. Dennis, also what are your thoughts on the tariff deadline, which is completing on the 9th of July? What kind of impact will that have on emerging markets, including India, especially because Donald Trump went ahead on record and said that he does not intend to extend the deadline beyond the 9th of July. What kind of impact will that have on emerging markets?
Well, first of all, let's see if he actually does that. I think there's still a very good chance that he will kick the can down the road a little bit more. We don't know if he's going to reimpose all of these tariffs. I think if he were to do that, I don't think it's going to have that negative an impact on the emerging markets. And I'll tell you why, because all of the talk, including from me, by the way, early in the year, was that tariffs typically should raise that country's currency because it runs the risk of pushing inflation up and therefore interest rates. With this particular tariff, a set of tariff policies or tariff announcements, which we've had since Trump came into office, you've had a flight from US assets of all sorts, particularly, of course, from the dollar. And so I think if you were to get significant tariff announcements in early July the 8th, July the 9th, I don't think it's going to break this very nice move we're getting in the emerging markets generally, because I think it's going to lead to probably further declines in the US dollar, which have been a very, very important driver. EM is up just over 14% this year. The dollar trade weight is down just over 10. And I think that's probably going to go further if Trump eventually comes up with a new set of tariffs in a few days' time. Now, for India, I think India is one of the better situations, frankly, to end up with some sort of a deal with the US on tariffs, because I don't think it's as controversial a trading partner as, for example, is China or Korea or Europe generally. And so I don't see India being a big relative loser here. But I guess my main point would also be that I think it's still a pretty good risk that Trump will not do what he's threatening to do on July the 8th, 9th, and may very well kick the tariff can down the road a bit further.
All right. Thank you so much, Mr. Denise, for those views. Great having you. Thank you so much for joining us this morning. Have a great day ahead.